The first commodity we are going to be looking at this morning is the US oil as usual. And from the look of things here, we have been profitable on the US oil so far in the last 24 hours. And remember, where were we during the live session yesterday? So during the live session yesterday, we were around here where we saw our price action had done a final breakdown of that $76.35 level. And remember, at the beginning of this week, we initially identified a channel which was where price action was actually oscillating right within the $77.90 level and the $76.35 area. So the $77.90 level was our initial resistance point for the week, and we had a support level for the week at the $76.35 area. And what we normally look forward to whenever we do have this kind of flat channel is to remain patient and wait out for price action to break out of this channel, probably the breakout of the resistance point to give us a buy opportunity, or the breakdown of the support level of the channel to give us a selling opportunity. Though we had a couple of buy moments at the beginning of the week when price action broke out to retest the $77.90 level, and in both occasions we saw price action move about 80 to 90 pips in our favor before we saw this bearish momentum that took over this market. And one thing that we observed here is that as soon as price got into the $77.40 area, we saw selling pressure, negating all attempt by the buyers to break out of that structure. And this led to a final breakdown of this bullish trend line to incite and give us a beautiful signal that we might be heading in for a selling momentum. And this was exactly what happened. Price action did a final breakdown of that support level that we identified at the beginning of the week. We saw the retest of structure, and this incited this bearish momentum that we had prior to the live session yesterday. And during the live session yesterday, we identified a simple setup where we said we shall be using it to guide trading activity. And one of the setup we identified was this bearish trend line after connecting the series of lower heights. And since we had the breakdown of the $76.30 level, for those who had missed out on that opportunity, I laid emphasis here that we might likely see price action give us another chance to join that decline, and this might likely come in the form of either a retest of the structure, which is exactly what happened 2 hours into the New York session yesterday, and boom, price action dropped significantly well. And remember, we also identified structures like the $75.50 level and the $75 area where we anticipated adding another position to our existing trade if price action moved in that direction. And in fact, since yesterday, now we have a situation where price action had moved over 200 pips in our favor. So for those who had been part of this profitable trade, congratulations to you guys for being on standby to catch that move. And some of us will have taken some profit on this one and left this trade. But for those who are still in this trade, I will be advising you to get out of that trade at this point, as we have a situation here where price action appears to be trading right above the $74.30 level, which is sharing a beautiful confluence with that bearish trend line that we identified earlier to signal a possible bullish momentum going to be happening around this area. So at this point, I would advise you, if you are still in the sell position right now, kindly get out of this trade, as we look forward to see what to look out for going into the New York session today. So before I go into the details of what our expectation is going to be like for today, the first thing I would want to do here is to scale up into the daily time frame so that we can have an holistic view of what is really going on in this market. And the reason why we would have to go into the daily time frame is simply because we need to look at this from a long-term perspective and identify if the sell position that we were yesterday is still going to be valid for today, or we might likely be seeing a bullish momentum from that point. So when we scale into the daily time frame here, well, like we always say, we have identified the fact that price action has been bearish in the last 7 to 8 months, and as a result of this one, we have this bearish trend line figured out after connecting the series of lower highs here. And as you can see, price had consistently respected that bearish trend line. However, when we zoom into structures probably between the month of September and this present moment, one thing you would observe is that price action had been caught within a consolidation phase. And as you can see, what we have here, we have something around the $82.50 level and the $73.50 area, which has emphasized the indecision in this current market, as price action is yet to break out of the structure. So we have been trading within a range right now in the last couple of months. So at this point in time, price action dropped yesterday, breaking down this demand zone that we identified earlier. As you can see, the $75.50 level was broken to the downside with an engulfing candle. And right now, going into today's session, we have the situation running at this point where price action appears to be approaching that $73.50 level, which has been a strong buy niche in the past. You can see what has been happening here since the month of December. We saw how this level had been negating every attempt by the sellers to break down the structure. The same thing also happened at the beginning of this month as well. And right now we have a situation where price is heading towards that $73.50 area. So this is another key level that we want to be taking into consideration while mapping out our plans for today. And another thing we also want to take note here is the breakdown of that $75.50 level, which I showed you earlier has been serving as a strong demand zone in this particular market. And you know, from a technical standpoint, whenever we have a breakdown of structure, we expect that price might likely come back to do a retest of that structure in anticipation of another wave of bearish momentum. So these are one of the scenarios we are going to be looking forward to. Another thing about this current structure is this bullish trend line that has been supporting bullish momentum for like 3 months now, which was broken a couple of days ago. And if we extend this bullish trend line into the future, we could still see a situation where price might likely come into retesting either the $75.50 level or the bullish trend line here, which shares a confluence with that $78 level to incite another bearish move. So these are the things we are going to be looking forward to for today. But most importantly, we want to see how price action is currently reacting to the $74 area, as whatever market structure we are able to identify here will be the basis for the idea we will be holding on as we head into the New York session. So one thing about this current structure is, considering the fact that price is above a strong demand zone, we might likely see a trend continuation pattern, probably like a double bottom structure on our lower time frame to incite this counter trend opportunity back into the structure. That is one scenario. Or we could see a situation where a trend continuation pattern is formed around this level that will lead to the breakdown of the $73.50 level for another wave of selling momentum. So these are the things we are going to be looking at on the lower time frame. So with the information we have gathered here on the daily time frame, we shall be scaling down to the lower time frame and focus our attention around the $74 level. Now going back into the 1 hour time frame, this is what we have here. And we need to take into consideration that $74 level, which we identified there. So we are zooming into the current structure. And what we have noticed here since yesterday's later part of the New York session yesterday, we have seen a situation where price has fell within a range which is between the $74.30 level and the $73.85 area, to emphasize the indecision in this market. And in fact, the structure here has a tendency of either going bullish or bearish, in the sense that it could transition into a reversal pattern, and at the same time it could transition into a trend continuation pattern. And now if we take into consideration this impulsive move to the downside, and looking at the current structure, as price action has been finding buying pressure around that $74 level, which we identified on the daily time frame. Let's quickly draw that out so that we don't get things mixed up here. So we have the $74 level figured out, which is one key level that we want to be focusing our attention on today, and at the same time using these to guide our trading activity for today. So we have the $74 level, a strong psychological level there, and we can see what has been happening here in the last 4 hours. Price action has been finding buying pressure around that area, as price has been unable to break the previous low that we have here. And so what this simply means is that we could likely have a reversal pattern here in the form of a double bottom structure. And you know, from a technical standpoint, whenever we identify a reversal pattern like this, the next thing we want to be doing is to identify the neckline of that reversal pattern, which will be the platform upon which we want to be taking a buy position. And coincidentally, the neckline area falls exactly along the resistance level of that flat channel we identified earlier at the $74.30 area. So now, one thing that also makes this current structure a very interesting one is the fact that it shares a confluence with that bearish trend line that has been guiding selling momentum since the beginning of the week. Remember, we had this bearish trend line. Let me zoom out so that we can see what I'm talking about here. So you can see the bearish trend line since the beginning of this week, and currently price is trading around that area. And making it more interesting is the fact that it shares a confluence with the neckline of that reversal pattern. So for this reversal pattern to be mature, we want to see an outright breakout of this neckline area to give us a valid reversal pattern. And coincidentally, it shares a confluence with that bearish trend line, which will definitely be a beautiful signal that the trend line may no longer have the capacity to continue to hold selling pressure. And if it so happens that buy pressure resumes above the $74.30 level, we'll definitely want to be joining that bullish momentum to the upside at this point. And mind you, if this happens, please note that this is a counter trend opportunity, and we might likely see a situation where price will come back into the structure between the $76 area and the $75 area. And why is that so? If we look at what has been happening here since last week Friday, we can see that between this area and this area has been a strong demand zone in this market. And yesterday we saw the breakdown of that structure to emphasize that that level was no longer strong enough to hold that bullish momentum anymore. And there is a likelihood that price action will come back into that structure again. So we want to be placing our TP target for this buy opportunity above the $74.30 level, between this area around the 76.35 and the 75.50 area, after which, if price action hits that structure, we want to see how price action will be reacting to this level to decide if we are going to be adding more position to our buy trade, or probably get ready to join a decline from that level to the downside. So these are the things we are going to be looking forward to here. So right above the $74.30 level seems most appropriate to join a buy position at this point, as that will result into the confirmation of that reversal pattern we just identified around this area, and at the same time breaking out of that bearish trend line that we have here. So we are looking bullish at this point in time, and we have our triggered position on. But if you had not had the triggered position on, well, you might want to remain patient, scale down to lower time frame, look out for buying pressure around this area, which is still likely going to happen at this point before we join another wave to the upside. So let's be on standby to catch this move when it happens. Now, there is one thing I would like to state here, and which is the fact that we need to be very, very open for any possibilities that could happen in the market. The market is fluid, so do we have to always also be fluid too as well, so that we can be profitable. So once we have a structure running and things are actually going against us, it is our duty to be as fluid enough to be able to change perspective with the market as things run by. So in that regard, since we already have a structure here, there is a likelihood that price action might take us out of our current buy position in such a way that it leads into a false breakout here, where a breakdown of the $73.85 level will be a beautiful signal for selling opportunities in this market to the downside. And if that is going to be the case, we want to be having our sell stop order right below the structure. And if price action does a retest of structure respecting that bearish trend line one more time, then we could be adding more position to our existing trade. And then remember that we also have a key level at the $73 level, where a breakdown of that structure will also welcome additional position to our existing trade. So these are the things we shall be looking forward to during the New York session today. So we have this channel as a guide for trading activity. So if price action remains above the $74.30 level, we want to feel comfortable in our buy position. And if price takes us out of the buy position, leading to the breakdown of the $73.85 level, we shall be getting ready to join that decline to the downside. So these are my views here on the US oil for today. I hope I made myself clear. And if you think you need me to make more clarification on one aspect in what I just discussed, feel free to drop your inquiries in the comment section below.